Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. We're here on Thursday, March 26th, 2026, diving deep into the social media chatter and market insights from yesterday, March 25th.
And what a day it was, Ethan. We saw a really high volume of posts yesterday, flagging a diverse mix of companies. While there's certainly some fervent optimism out there for certain stocks, our analysis shows a generally cautious, if not outright risky, market sentiment for many of these hot leads today.
Absolutely, Brooke. It feels like the market is buzzing with potential, but also, a healthy dose of skepticism is definitely needed. Let's kick things off with Rocket Lab Corporation, or RKLB. We saw some incredibly bullish sentiment for them. One user was talking about RKLB's rocket tech leading the space revolution, and even set an ambitious price target of over $500 per share. They're also anticipating a SpaceX IPO to really push RKLB up. Plus, there's recent news about RKLB shares soaring on SpaceX IPO buzz and a buy rating from Clear Street.
Well, Ethan, that's certainly an exciting narrative, but my KPIs are waving red flags. While the 35.7% year-over-year revenue growth is strong, RKLB's debt-to-equity ratio is an alarming 15.395. That's heavy leverage for an unprofitable company, with a net profit margin of negative 32.94% and negative EPS. The user's $500 price target, it's more than 5 times their 52-week high. And what's really concerning is that insiders have been significant net sellers, offloading almost 40% of their total holdings over the last 6 months. That kind of insider action can be a real cautionary signal. We've had a mix of ratings for RKLB in the past, including speculative gamble and even a buy. But today's financial picture, despite the hype, reinforces a very cautious stance.
So the growth story is there, but the balance sheet is saying, hold your horses.
Precisely. For RKLB, given the high debt, unprofitability, and insider selling, our final verdict today has to be stay away.
All right, moving on to Fundrise Innovation Fund, VCX. This one has been talked about for its stakes in SpaceX and Anthropic. One user highlighted it for its cloud exposure and as potentially the hottest stock in the market. There was even news of its NYSE listing, which increased visibility.
And the market definitely got hyped, Ethan. This stock shot from $31 to $575 in a matter of days, then corrected to $380. But the crucial piece of information here, and it's a big one, is that a fund like VCX with similar stakes jumps 1,200% above asset value. That's extreme overvaluation, meaning the price is massively disconnected from the underlying value of its holdings. As a fund, its traditional profitability metrics are 0, or NA, so its value is tied directly to those private holdings. This suggests the speculative run-up is likely exhausted. Our previous ratings for VCX have been stay away, and that remains the case.
Wow, 1,200% above asset value is definitely something to take notice of.
Indeed. For VCX, because of this extreme overvaluation and the severe volatility, our final verdict is stay away.
Next up, we've got AST Space Mobile, ASTS. This one had a user predicting its satellite cellular tech will revolutionize mobile connectivity with an equally bold price target of over $500 per share. There's also the anticipation of a SpaceX IPO potentially boosting ASTS, and news of it climbing on SpaceX IPO hype and Bluebird 7 discussions.
It's a compelling technological vision, Ethan, but the financials are lagging behind that dream. ASTS is currently unprofitable, with negative EPS and 0 net profit margin. Their debt-to-equity ratio is high at 93.612, and their price-to-book ratio is a very high 14.89, meaning the market is pricing in a lot of future growth. Insiders have also been net sellers. While a successful Bluebird 7 launch could be a game-changer for those KPIs down the road, it's still very speculative. ASTS has been consistently rated as speculative gamble or stay away in our past discussions, and my current assessment aligns with the latter.
So a truly revolutionary idea, but perhaps a bit ahead of its financial stability.
That's one way to put it. For ASTS, despite the exciting technology, our verdict is stay away.
Let's turn our attention to NVIDIA, NVDA. Their current numbers are just incredible, Brooke. Revenue growth at 73.2%, a net profit margin of 55.6%, and return on equity over 100%. Plus, insiders have been net buyers, scooping up over 5% of total insider shares. They're targeting energy AI factories, and CEO Jensen Huang is making big AI predictions.
Those are indeed stellar financials, Ethan, but the sentiment we saw yesterday was distinctly bearish. Users are very concerned about ARM holdings directly entering the chip-selling market. As one user put it, gonna be interesting to see how NVIDIA and Qualcomm react when their chip supplier becomes their competitor. That's a significant new competitive threat that could impact their revenue growth and profit margins, which are currently priced for perfection with that PE ratio of over 36. This stock was rated stay away yesterday, and that concern about new competition is a critical factor moving forward.
So even with those incredible numbers, the future competitive landscape is a significant wildcard.
Exactly. For NVDA, the new competitive threat, combined with an already high valuation, leads us to a stay-away verdict for new investments.
All right, on to Supermicrocomputer, SMCI. We saw one user unfortunately report a significant loss, losing about half their portfolio.
And that loss highlights the volatility, Ethan, with SMCI's current price near its 52-week low. The news for SMCI is overwhelmingly negative. Citi and Rosenblatt both slashed price targets due to reputation risks. We're seeing reports of a smuggling scandal and shareholder lawsuits regarding alleged China AI server exports. With a high debt-to-equity ratio and a low net profit margin, these legal and reputational issues could severely impact future profitability and investor confidence. SMCI has generally been a stay-away or speculative gamble in our past discussions, and this current news is a strong reinforcement of that.
So a lot of headwinds for SMCI right now.
Absolutely. For SMCI, the overwhelming negative news and significant risks mean our verdict is stay away. Finally, let's talk about Intuitive Machines, LUNR. The community is very bullish here, anticipating a major catalyst with the NASA Lunar Terrain Vehicle contract award coming up in May. They've already seen a big climb from a new $180 million NASA contract and a Stifel price target upgrade, with talks of the stock potentially rallying 40%. Plus, insiders have been buying, which is always a good sign. It's certainly an exciting story with those NASA contracts, Ethan, and the insider buying is a positive signal. However, LUNR's financials are highly precarious. Their debt-to-equity ratio is extremely high at 182.698, and they're operating at a substantial loss with negative net profit margins and EPS. What's more, their price-to-book ratio is negative, indicating liabilities exceed assets. While winning more NASA contracts in May could significantly boost revenue and eventually move them towards profitability, the company has some serious financial hurdles to overcome. LUNR was last rated as a speculative gamble, and with these fundamental issues, it's a downgrade in our assessment today.
So the future potential is huge, but the current financial footing is a bit shaky.
Exactly. For Lunar, due to the very high debt, unprofitability, and negative equity, our verdict today is stay away.
Well, that was a truly eye-opening session, Brooke. It seems like the market, particularly in these hot lead areas, is demanding a lot of caution right now.
It really is, Ethan. Even with some passionate user sentiment, the underlying KPIs for many of these companies point to significant risks.
So let's wrap up with our compiled list for deeper analysis for those hunting for multi-baggers out there. Investigate as buy, none. Investigate as cautious buy, none. Investigate as speculative gamble, Intuitive Machines, Lunar. And that brings us to the end of today's episode of the Daily Hunt for Multi-Baggers. Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us today. We'll be back tomorrow with more insights.
Happy hunting, everyone.